Okay, so let's get started.
Yeah, so
Yep. Okay, so for this year, what are we gonna do, right? We're gonna have a lot more condo reviews. So last year we did a Facebook Live every 2 weeks. So this year we're gonna do it every month instead and devote some energy, right, to reviewing condos and reviewing new launches. We have already done 2 of those. So if you haven't seen it, we're going to put in the links in the description. There will be about Normanton Park, the recently launched Normanton Park, and the soon to be launched the Rise Residences, or at least at that point in time when we did that video, it was supposed to be called the Rise. Now we've been informed it's no.
they're gonna change
it probably would not be called the Rise anymore. But
Yes.
it's the integrated development on top of Pasir Ris MRT.
Correct.
Quite
So
sought
we've
after.
sent in the link in the comments, so you guys can check those out if you're keen.
And then let us know lah. Let us know what else can we include in those videos lah that you think you will find useful, right? And of course, right, the next point.
Yeah. So we'll talk about what happened, in the news. As usual, we always recap with the news. So I think one big news was last weekend, Normanton Park was being launched, and we sold 1/3 of the units, which was pretty good, about 600 units. It's actually more than or bigger than the size of certain condos. And we kind of expected this to happen, judging from the launches at Claiborne and at Penrose previously. And also, if you actually check out our review on Normanton Park, a large number of the units that were being sold are the cheaper units, not exactly cheaper units, but the lower quantum units, because there are very little supply of units under 1 million in the market right now. So this is just one piece of news. There is another piece of news that happened earlier this week, which looks quite scary. But we actually predicted this last year, in the second half of last year. We just didn't expect it to happen so quickly. So on Tuesday, Straits Business Times came out that the Singapore government is keeping a close watch on the property market, and just earlier today, Wednesday, there is talk of more private property cooling measures. So what are these cooling measures that they are talking about? Basically, analysts have flagged out that there is a possibility, that if developers begin to bid aggressively for land or start, collective sale en bloc, this will cause the highland bids to follow with, resale owners pushing up their prices and causing the whole property market to move up as a whole. I think we have explained this before last year, and we were expecting this to happen probably later this year or even next year. So we were surprised, that such warnings came out so quickly. Today, on the Straits Times, they said, government may introduce further loan curbs, which would mean reducing, the loan to value ratio probably, or increasing additional buyer stamp duties for investors and foreigners, to slow down the pace of price increases. So I think basically the government is just very careful. They are very concerned if prices were to increase too quickly. They may then impose us with another cooling measure. So hopefully we don't hit that trigger point that the government deems as property prices moving too quickly so soon, early in the year, because it's only January of 2021.
Okay, so that's that lah, right? We all started the year with property taking up the headlines like 3 out of the last 5 days. So but not to worry so much, right? Because cooling measure come or don't come is something that's out of our control, right? But what is within our control is, of course, your financial planning, and of course for those of you who are joining us, right, it's taking the effort to learn about the market, right, so that you can you don't get too scared off by headlines and things like that, right? So today, right, let's get into it. Today, what are we talking about, right? ECs, condos. We also have added in BTOs because we've gotten a lot of questions with regards to comparisons on those as well, especially for first timers. Right, so we'll start off with some comparisons, case studies, right, talking about capital appreciation, timing and flexibility, something that we emphasized a lot about. Moving on to pros and cons for ECs and what those pros and cons mean for first timers and upgraders, and we'll end off with our thoughts on Parc Central. Right, let's get going.
So this capital appreciation case study, basically, we've got three different scenarios. Our typical HDB BTO, purchase price really cheap, under 400k, and then we have the EC at about 700 plus 800k, and then you have your private at about 1.1 million. So these scenarios, we're taking them to be as in 2017, and then you have your various sale prices with the different holding periods lah. So purchase prices, being a number of years earlier, but the sale being concluded in late last year lah. Okay. So you got
so what we did the main purpose of this table, right, is to show you the profits, right? So purchase price, sale price, they were all sold around the same time, right? So the profit for the BTO 193,000, EC 238,000, private 178,000, right? Normally people just look at profits but as a property investor, property, you have to look at profits and also the amount of time it takes for you to earn that profit, which is why we added in the other line, holding period. So BTO and ECs, you have to hold a bit longer, right? So this particular case, the BTO 8.4 years, EC 8.5 years. For private, it was because that private, anyway, this private is ours it's our own property that we just sold earlier this year. We held it for 4.6 years. Is because the time when we bought, it was still under the 4-year SSD, which is why it comes out to 4.6 years holding. So then the difference, right, because we have rented out our condo from day one. So net what you see, right, we use this term return on equity is because it's how much profit you yield based on how much equity that you put inside. So how much equity you put inside basically is the down payment. And you see BTO is outperforming by a lot because why? The BTO is taking HDB loan. So when you take a HDB loan, you only need a 10% down payment. So the equity in is very, very low, but the profit is high. So which is why you get a 52.5% per annum return on your equity. Very, very high I don't think you can get any kind of investments like that, right? So for EC, right, this is where it gets a bit more interesting, right? EC versus private. So the fact is that our property, the private property, was rented out from day one. So whilst the profit, the net profit that you see, 178k versus 238k, right, significantly lesser. The lesser holding period and the rental adds up to give a return on equity that is actually more for the private as opposed to the EC. Okay, but this is just from the capital appreciation point of view, return on equity per annum point of view, right? Next on, we'll move forward, right?
So because we are on the point of return on equity, you can actually see how, especially in the case of the BTO, having a lower down payment will help your investment have a higher return. So for the two of us, we actually believe that if the government were to impose a lower loan to value as a cooling measure, which would mean higher down payment, right, this will further lower your return on equity if you buy after the cooling measures. So for those of you guys who are hoping to wait for after the cooling measures, hoping that the prices will taper off and it will be cheaper, it may not be really true, because we have seen how cooling measures in the previous years, right, they have just resulted in a delay of the price increase rather than a lowering of the prices. And instead of buying cheaper, right, you end up with a lower leverage. meaning higher down payment, and it really reduces property as
The
as a
attractiveness of the returns for
as an
property.
investment.
Mm,
Yeah.
okay. Next. Right.
Timing and flexibility. So we added this table to further reinforce the fact that if you are a first timer now, and we all start out at the age of 27, by the time you sell a BTO, because of the long holding period, it might be at age 39, because nowadays you have to hold your BTO, you can only get keys in 2026 or 2027, 2026 or 2027, and then you hold for 5 years more. So that holding period is really long, about 11 to 12 years, versus an EC shorter, because it takes only about 2 to 2.5 years to build, and then you have to hold for 5 years. And then of course the private, with now seller stamp duty being only limited by 3 years, you can potentially hold it for a really short time. So you just imagine one BTO cycle, right? You can actually do private 4 times. One EC cycle, you can do privates 2 times. So I think it's just something to think about.
Yeah, so while yes, EC and BTO is subsidized housing, so it's a sure bet to make profit, right? But one will struggle to reconcile taking 10 years to make that profit, 7.5 years to make that profit versus 3 years to make a profit. So that was the kind of consideration that we had when we thought about it, right? So at that point in time, really EC was confirm make money, because at that point in time, the ECs, you don't even have to wait to move in. You buy, you straight away can move in already, right? But versus a private. So and another thing, right, which is the point that we stated, your needs will change, right? As you grow older, and it will change a lot. If you get a property at 27, your needs at 27 and your needs at 39 will change significantly, right? So from the clients that we have spoken to, a lot of them really cannot wait for their MOP to be over, right? While the obvious group will be those that want to cash out and upgrade. A good chunk of them is really have to sell because they need to move on for more space, to be closer to kids' school, to house their parents, right? So while a 7 to 8 year wait that we are looking at for the EC is quite okay, right? We tie in the 2 slides together. BTO, yes, 50% ROE, return on equity per annum, but is a 11 to 12 year wait worth it, right? It should not be simply just looking at return on equity, confirmed profit, right? You do have to tie in the timing as well. Is it really worth it? This is something that we got to ask ourselves lah.
Yeah, another thing to think about is that with all this waiting, right, you cannot control the market conditions when you hit MOP, and then you don't know what happens when you hit MOP, and then you've been waiting so long to sell your house, and then when it comes MOP, imagine you're waiting to cash out and make your profit, but then at that point of time, right, you can't really get the best out of it because of certain market conditions, example COVID, yeah, but at that point of time you really need to move. So then how? So while BTO and EC give you that certainty in profits, you do give up certain things like your timing and your flexibility. So I think this is just what we wanted to share with you guys.
Right, so the next point, the pros and cons for executive condominiums. Okay, so let's take a look at it. So carrying on from the previous slides, right, one of the obvious benefits is 100% profitable. So you never see an EC lose money one lah, or well, at least we haven't seen any ECs, right?
Barring those that had to sell because of urgent early MOP conditions and things like that. Like those that sell upon MOP, we haven't seen one that lost money. Okay, so right, so but of course we tie that in with the cons lah. The first line, the first pros and the first cons is really hand in hand. It's a summary of what we talked about earlier. Confirm profit, but you have to hold for a longer period of time, right? So on the second pro, right, no ABSD, right? So the second and third pro is more or less about the same thing. No ABSD and deferred payment scheme. Okay, so ABSD, additional buyer stamp duty, right?
So as an upgrader, so this second and third point are more applicable to upgraders lah. So for example, you're an upgrader from a resale HDB or from a BTO, you want to go into a EC. There is no need for you to pay ABSD because you have to sell your HDB regardless. So there's no need to pay ABSD. And deferred payment scheme, how that works is that as an upgrader or even as a first timer, you only need to down pay 20%, okay, versus 25% for a private property. You only need to down pay 20%, pay the stamp duty, and you basically don't have to pay anything, right, up till the project TOP, right? You also don't need to take a loan up till when the project TOPs. So that's an obvious benefit, helping upgraders lah, more so than first timers, and all the more important now that they have taken away the reissuance of options. This one would definitely help upgraders a lot. Okay, but you know, for EC, wait, let me take a look at it. Yeah, so another good benefit with the deferred payment scheme is you do not have to service two mortgages at one time lah. You only just need to service one mortgage, and the most beneficial point in our opinion is that you can continue to stay in your flat up to the point that ECTOP, so you don't have to move twice, right?
So if you look at it this way, right, these pros on the no ABSD and deferred payment scheme, it seems to really outweigh the cons in terms of the second timer quota and the resale levy. For this resale levy, right, to the both of us, we actually see a lot of people see as a unnecessary cost, and they struggle to have to deal with having to pay. They feel like they rugi by paying the resale levy. But another angle to look on it, which is what we feel, we actually think it's actually okay to pay the resale levy, and we'll touch on this later on. And to clarify on the second timer quota, because everyone has the impression that second timers only can fulfill up to 30% of the EC. Yeah, but this is actually only applicable during the ballot. So if the EC does not sell on launch day, any balance units after that, second timers can just go in and buy. So these cons are more for an upgrader perspective rather than a first timer. Yeah, so on to the next point, for the benefits of an EC, definitely our favorite method D. So again, for those of you who are joining us for the first time, we cannot say method D outright, but it is something that allows you to own two properties without having to pay ABSD in the future, and it's only applicable to ECs and private properties. That's why it's a pro. And if you'd like to find out more, please contact us.
So quite interesting because previously we thought a lot of people know method D lah, but apparently it's still not really a very common thing, right? So do get in touch with us, especially if you are looking to buy an EC, because in order to execute this method D, there has to be planning done ahead of time, similar with private. Okay,
so then for the cons, definitely mortgage servicing ratio.
So what is mortgage servicing ratio, right? We're going to put a link in the description that will tell you the definition of the mortgage servicing ratio is by MAS lah. Okay, so in simple terms, okay, you are only allowed to use 30% of your monthly income to service mortgage. So that is in simple terms. And why is that a con? Because for private property, we utilize total debt servicing ratio, right? And total debt servicing ratio allows you to use up to 60% of your monthly income, double of that, right? We'll share with you an example later on lah.
So and the last con is location. So because of the fact that the land is subsidized, they're usually located in not so prime areas. It's always a struggle for buyers to reconcile the price, meaning your confirmed profit, versus the location, making it a very emotional versus logical struggle. So how does one reconcile the pros and the cons, right? We'll try to do it over the next 2 slides for both upgraders and for first timers.
So, for first timers, right? What you will be asking yourself before making the decision between a private or a EC lah. So a couple of years back, right, whereby EC prices were significantly lower than private. So, for example, our friends, clients at that point in time could get three bedders at 800,000
And moving straight away.
and moving straight
Okay,
away,
or maybe okay, not straight away, but like half a year
half a
wait.
year or 1 year wait, right?
Yeah.
Right. And at that point in time, the three bedroom private was at about 1 million, so 200 grand difference lah. So it was pretty straightforward choice to go for EC at that time, especially for those that are looking for their own stay. Right. So because you don't have to your lock-in period is not as long. You don't have to wait the 2.5 years for it to build. So from 7.5 years holding cut to 5 years is really quite worth it lah. But today, right, you have a choice between a 2-bedroom private versus a 3-bedroom EC at the same price, right? About 1.1 million, which we will give you the example later on, right? And both have to wait the same period, the same amount of time. So that gives us a lot more to think about.
Yeah, so the first question that we would like to throw to the first timers out there is, what is your objective? So like we always say, try to decide if this property purchase is more for investment or more for own stay. So thankfully, with EC's locations being quite far off, it is quite easy to make this decision, I would think. And if it is for investment, you would want to consider the amount of time you have to hold it for. And also important to take note that you cannot rent out your EC during your MOP period, the first 5 years, while you can do so for private. So as you can see, from the previous slides, right, that the private actually make a better investment in this specific aspect, whereby you can rent out while you don't need to stay in the house yet. So questions to ask yourself: do you intend to get married soon? And I think this is what we asked ourselves also, which is why we went down the private route. We didn't need a house soon, and we didn't intend to get married that quickly, so that's why we went and focus more on investment and got a private for rental. But of course, if you're looking to settle down and find a place for your own stay, then the own stay factors, and it will be a really more personal choice on which one you would prefer.
Right. So second point, right, think about your property journey lah. Will this EC or whatever you are purchasing be your ideal and final home? Another question you want to ask yourself is, will your income continue to go up, right? So depending on the answers, right, you want to plan your exit strategies for those purchases to match up with where you see yourself in 5 years, right, from now. Because if that does not tally with the kind of property that you intend to purchase, then you will really want to think about it lah, because you don't want to be like, if you do well and earning a lot of money but you're stuck in a property that will not serve its purpose for you. That is what we are trying to say. Okay. Right. So then you want to ask yourself also, right, how do you inject or how do you add flexibility into your property purchase, into your property journey, property plan, right? Things like utilizing method D, right? Or do you go a simple sell and upgrade, right? Do you want to rent it out moving forward? And of course, the last point, down payments and loans, right? What we mean by that, let's take a look at the next slide. Okay, so for this slide, right, we are giving you an example of two lovely a lovely couple in love want to start their first family, right? So combined income $10,000 a month with an average age of 30. Okay, so first column, private condo, right? Based on 10K income, they can loan up to 1.3 million for a private condo, right? That is based on TDSR, total debt servicing ratio, which we mentioned allows you to use up to 60% of your monthly income to service debt. They can only take 668,000 loan if they want to buy an EC, right? Based on mortgage servicing ratio, 30% of your monthly income to service the mortgage. Actually, it's quite straightforward. You can see that the loan one can take for an EC is basically half, actually more than half of that for a private condo because of the 60%, 30% thing. So moving forward, if they're looking to buy a property price of about 1.1 million, right? Just now we were saying 1.1 million private condo, you can get a 2-bedder. EC, you can get a 3-bedder, which was why we asked that question earlier on. Ask yourself,
do you need all 3 bedrooms?
Do you need all 3 bedrooms now, right? Because if you don't need, take a look. Based on the loan, right? Because they are eligible for $1.33 million loan, 75% of 1.1 million only works out to be 825. So no issues with loan. You can take full loan for the private condo. Then you just need to down pay 25%, 275,000. Right? This loan thing and down payment thing will impact you a lot in the EC. Take a look. If you want to buy a $1.1 million EC, you are only able to loan 668,000
based on your MSR.
Based on your MSR. So then that forms a humongous shortfall of $632,000 difference between purchase price and loan. Okay, so the down payment now is very, very different. So if now we add this in, if you're going to have to down pay 432,000, first question is, are you able to down pay 430? Even if you are able to down pay, remember our first slide whereby we were talking about return on equity. So the higher you down pay, with that, if the profits are the same, the lower your returns on equity are moving forward. Okay?
Yeah, so I think main point is that MSR is making your down payments really high and making you question whether this EC thing journey is still worth it. So for upgraders, the considerations are similar. The earlier example also applies to upgraders, and the thing is, upgraders, you also have the fact of resale levy. So yeah, which brings you on to the next point on down payment. For EC, your loan is not as much. Like in the previous example, you will need to pump in a lot more funds for the down payment. And if you think along this line, right, if you have sufficient money to pay the 20% and the stamp duty first to book an EC, and then after that only pay the rest when collect key and you sell off your house, then that is okay. But if you have to sell your house to get the 20% to fund for the EC, right, then after that have to go out on rental, and after that you still pay your resale levy, then you might want to consider, why don't you go for private straight away, and then your down payment might not be as much because you have a higher loan. With using TDSR, you may require lesser down payment.
And then you don't have to pay the resale levy if regardless you have to sell to fund that down payment. That one is the point, right? Can you afford the down payment for the EC first? If cannot, right, then think about it, right? Look for alternatives, right? Consider alternatives, right? So lastly, timeline. We are elaborating more on this from the earlier slide on resale levy, how to see resale levy and timeline hand in hand, right? So resale levy in our eyes, especially if you are a big family and you may find it hard to shift several times, right? So by paying that resale levy to buy an EC, it allows you to stay in the house for a longer period of time as opposed to renting, right? So in this case, right, it's either you pay a resale levy or you go out and rent. Then you won't be so hard pain to pay the resale levy, right? So but
look at the resale levy as your rental for being able to stay in your current place.
Yeah, right. So not a net or outright expense, right? But for those of you who are more mobile, right, maybe just one kid or maybe just a couple, right, and you have the flexibility to stay somewhere else, like for example with your parents, right, so then perhaps you may not want to pay the resale levy and consider a private instead, right, because in that case, if you pay a resale levy, then it will be a outright expense. So resale levy also got difference, depending on your family and depending on how flexible you are, like your property journey.
Yeah, so the golden question is, are ECs still worth it? Our answer is, when you buy EC as you want to buy EC as like a concept as a whole and not specific ECs. For upgraders, yes, because you don't have ABSE, but you do need to consider your timeline versus capital appreciation. And especially if you are a big family, it's easier not to shift your family so many times. The resale levy that needs to be paid, it is worth it. Yeah, but for a small family that is more mobile and have more options, then maybe ECs are not so worth it if you're looking to upgrade into an EC.
Okay. But for first timers, Elizabeth and I actually feel there are a lot of alternatives, right? Actually, better alternatives that you can look at this point in time, right? Another reason is that by going for EC is considered one chance of a subsidized housing. So then think about it. You are buying a subsidized house at more or less the same price, or if you have to down pay more, right? Than a full private, then but subject yourself to all the restrictions, is it then worth it? So I guess you really should sit down and consider the alternatives before making that decision lah.
Yeah, so our thoughts on Parc Central, which not sure how many of you guys here are interested in Parc Central launching this weekend.
How many people put in their check for Parc Central already? Yeah, I think cannot submit check anymore. I think they cut off the check already.
The cutoff was yesterday, so it's either you are in it or you're not in it anymore.
Yeah.
Yeah. So for Parc Central, we really like the quantums for the various 3-bedroom, 4-bedroom, and 5-bedroom. Comparing that to the existing new launches, private new launches that we see in the market now, there is still a significant gap in the quantum. So there's room for appreciation. We also like the fact that it's also near a lot of BTOs, our favorite point, supplying you with buyers moving forward. And we like it, that last point, we like it because of UWC. It's an international school really nearby, I think just across the road. Gives you a lot of flexibility in the future to rent out, or when you want to consider using Method D. Yeah, if you still don't know what Method D is, then get in touch with us.
So on some of the points that we don't quite like, okay, location. It's really quite far from the MRT, right? It's not the most convenient of places lah. Second point, competition. There's a lot of condos down that stretch, and the scary thing is that quite a number of them are not that much older nevertheless, but not that much older and cheaper than Parc Central, right? And last thing is timing, right? So it's Parc Central is launched now, today's market, whereby EC supply is considered low, right? Because there's only one EC launch every year, right? It's kind of like an artificially created low supply, then artificially driving up land bids and demand for ECs, right? Then you add that, right, to where the market is now, right? All the newspaper articles that we were talking about earlier in the show, the market
cautioning
is really,
that the market is getting too hot.
Yeah, the market is really getting quite hot now. So as a whole, we feel the ball is in the developer's court, not the buyer's court, versus say 3 years back, right, whereby the supply was more than demand, and the developers could only sell finish, or could offer you like, you buy, we wait 3 months, you collect key. So pros and cons, right, of the place.
Really depends on yourself, I guess. Yeah. So lastly, we feel that not all the ECs are created equal. There are definitely better ECs out there compared to the rest. I think the struggle is how to pick the correct one. That's what a lot of people are struggling with. So you really got to weigh your options, and I think the thing that me and Alvin struggle with for the ECs nowadays is that we can still find condos at close to EC price. Not as cheap as the EC, but close. And when you have this, and when you have these private condos at close to EC price, then we feel it might be more worth it to go for these condos instead, because it gives you more flexibility in timing. Down payment might not be as stressful also. So if you're keen to explore further, we have done more in-depth research and shared those things with our clients. So do get in touch with us.
But if you are really serious about it, okay, about exploring either buying your first property or upgrading, we have updated our ultimate guide, right? For those of you who are thinking about it and would want to have a copy of our guide, send us a text, because our contacts are here right? Drop us a WhatsApp and we're happy to share that with you. We have tweaked it a little bit as compared to our edition last year because of the change in the market. So that's what we have for you guys. So for anyone have any questions, right? We get a lot of questions, especially with regards to ECs, BTOs, condos. So happy to take questions. Thank you all for joining us, right? Some of you have just joined us. Elvin, Veronica, Ling Ling, Git, Steve. Hi Clarence, Happy New Year. Yeah, Raymond, Patty, Louis. So anyone have any questions, right? Happy to entertain them. Or you want us to go back a certain slide you didn't quite understand what we were talking about previously. Can also let us know, right? We are happy to run it through again. We'll be here for probably another 1 or 2 minutes before we go. Yeah. Since we are here, right? Let us know also what you would like us to share. Alright, what you would like us to talk about in our next Facebook Live session, which condo you want us to review yes, Matthew. Okay. Potential BTO upgrader. Sadly, due to MSR and price out Parc Central. Thus, I'm considering nearby EC, right? Up at Tampines. What are your thoughts on up at Tampines for own stay and planning to exit about 10 years time?
When you say you're priced out of Parc Central, does it mean because of the
MSR? That's due to MSR because of the loan.
But
the
priced
loan thing.
Priced out
Means I think Matthew, did we get you correctly? Meaning that the loan I believe he's thinking the same issue with what
I'm
we
not sure
have.
it's because of that, or is it because you burst the income gap? The
Ah,
income cap of 16K for ECs. That's why you're not eligible for ECs anymore. I'm not sure if that's why.
yeah,
It's priced out now.
true, possible also, right? But any case, right, Matthew? The down payment
okay.
like that example.
Example.
Yeah, okay. So if you like the area up at Tampines, what are our thoughts? We've been there before. Some things we like and don't like.
I remember.
Yeah, up at Tampines, I remember layouts are quite nice. I like that. The 3 premium layout. You walk in the corridor. There's two balconies. You really have to think about the price point that you get in at.
Compared to the rest.
So inevitably, I believe it will be quite high. Easily paying a good $200,000 to $300,000 profit to the first owners. If your plan is to exit in 10 years time, you want to consider
also the age of
by that time how old is that condo already. Another point that we will look out for is the size of the development. We don't quite know how many units is in the arc. So rule of thumb, if you want to buy resale properties, the number of units in the development very important, because you need a good number of units to drive transactions up, right? So that it will very quickly move. 570 quite borderline usually we try to go above 500. The more the better. But the whole idea is that when you enter a resale property, you would want the price point to move very quickly above what you have bought at, and that requires transactions. Transactions require number of units. So I hope we give you an answer. All in all, for own stay, not too bad if you are happy to hold for 10 years. Just some of these things to think about Layout quite good Layout is quite nice. I must say. How many? 65 for sale
currently on Property Guru.
65 for sale, 1,000 PSF. I think quite okay The quantums are reasonable.
Yeah, but the 1,000 PSF is around there for that area, like all that.
Maybe Matthew, if you're still with us, you may want to consider the full privates in that area also. The reason why is that the first timers bought in a lot cheaper because you used to be an EC. If you buy in a private, you can enter at more of a level playing field with
the jump
the
is
other
not
buyers.
so the jump is not so large
You're not paying that much of a premium as compared to the majority of the other owners lah.
Correct.
Yeah, something to think about. Okay, any other questions? Or do let us know if you want us to, there's other things that you'd like us to share about, right? Ideas for the next Facebook Live. Not every time we have to think about what to share. Also quite tiring. Yeah. Condo developments also, which review we want to get. Not sure whether, do we still want to do the 3 things we like and 3 things we don't like about Parc Central into a full proper video lah. Yeah.
I think a bit too late.
Yeah,
Since
probably
the launch
a bit
is
too
this
late.
weekend. Yeah.
Welcome, Matthew. We hope we answer your question and that was beneficial lah. Okay.
But if we don't have any other questions.
Yeah, if there's no other questions, okay, but don't worry. If you do have questions, just feel free to drop us a text, or if you want a copy of our guide, also can drop us a text lah. So till next month, right?
Yes. For the next Facebook Live.
For the next Facebook Live. See you guys then. Bye bye.
Bye.